Hi there, Shingirai here again with another update on portfolio performance over the past week. We did see a relatively risk-on week where we saw our top ranging performers being the risk-on portfolio number 5 up 65 basis points versus CBAM 1v2 returning 0.3% in a week where 8 out of 10 of the CBAM portfolios outperformed their respective benchmarks. What we saw here was quite interesting in terms of contributors to performance. We did see a bit of a rebound there for iShares Global Clean Energy in a week where the market and investors are making bets that there would be some capitulation in the interest rate hikes coming from the Federal Reserve Bank, and obviously this asset class being sensitive to interest rates and being discounted at a lower interest rate, leading to some outperformance in pricing of the underlying holdings of the iShares Global Clean Energy, alongside a bit of a rebound in the price of Brent crude, which is somewhat correlated to performance of clean energy, as is largely viewed as an alternative, on the back of the International Energy Agency also increasing outlook for energy demand for the year. We also saw a rebound in performance from our Indian subcontinent, and that's on the back of some tailwinds we've been seeing since the beginning of the quarter, with earnings surprising on the upside, and also seeing some of the banking sector concerns and some of the Russia-Ukraine sort of geopolitical tension concerns falling off a bit, and the Reserve Bank of India also cutting down on that rate of interest rate hikes as well, following in the footsteps or leading rather developed market central banks. In terms of detractors from performance, we also saw some of those high yield positions through Fidelity Global High Yields down about 38 basis points, pulling back on the basis that there might be some more attractive returns coming from the longer end of duration in terms of interest rate hike capitulation going forward. And then we also saw that Rafa Diversified Return Fund also down 66 basis points, obviously having a higher exposure towards gilts and index-linked gilts, in an environment where we're seeing inflation in the UK still in double digits above expectations, coming in at a reading of 10.1% and really leaving a lot of room for that further tightening from the Bank of England, and obviously affecting longer duration gilts and index-linked gilts, which Rafa holds about 20 to 50% in. Here on a quarter-to-date basis, we're also looking at 5 out of 10 of the CBAM portfolios outperforming their respective benchmarks, with returns ranging from CBAM 1 returning minus 0.29% up to CBAM 4 returning 0.66% on a quarter-to-date basis. In terms of positive contributors to performance, again, the story has been around that capitulation of interest rate hikes, and you would see that strong outperformance from Hypnosis Songs Trust up 6.91%, recurring as a top performer from last week as well. And then, as I alluded to earlier, some issues in the Indian equity markets beginning to fall away, and that would see equity Indian subcontinent rebounding up 4.68%. And then another story that's been very interesting has been the story on the Japanese economy coming out of that rebound, and also really trying to tell the story around the shift in corporate governance for Japanese companies, which has been encouraging for external investors, and also seeing domestic investors, rather than investing money offshore, beginning to buy on the domestic Japanese market as well. And just this morning, seeing that GDP reading for Japan surprising on the upside, so quite an investment case to be made for the asset class there. In terms of detractors from performance, we continue to see some weakness there across our 3 sort of China holdings, ranging from HSBC down to Baillie Gifford, which were returning minus 5.83 down to minus 9.6% respectively, on the back of that continuing deterioration of economic data coming out of China, where we saw this week alone fixed asset investment falling off a bit, industrial production falling off a bit, but encouragingly unemployment coming in lower despite some concerns for inflation and also manufacturing numbers indicating weakness. In terms of other economic data that we got this week, we also got some unemployment figures coming from the UK, but what was more surprising was that downside surprise from UK labour productivity. We did see European GDP surprising on the upside, and also some glimmers of hope with CPI coming downwards as a measure of inflation. US also, retail sales and industrial production surprising on the upside, really indicating some resilience that we're beginning to see in some global economies, but also again highlighting some of the pressures we're also seeing for different parts of the globe. Next week, we'll probably be covering a lot more sort of macro data as well, so stay tuned and catch up with you in a week's time.